name is Walo, and welcome to the third episode of the Likwid FX Trading sessions. Today we're going to be speaking about brokers, and we're basically going to be answering four fundamental questions. The first question is, what is a broker? The second question is, what is a broker responsible for doing? Third question is, how do brokers make money, or how do brokers charge us as retail traders? And the fourth question, what type of brokers do we get? Okay, so to answer our first question, what is a broker? Now, a broker can be described as the middleman. Basically, a broker is a middleman between the retail trader or the institutional traders and the market itself. What the broker does, or what any broker does, is they provide access to the market by basically allowing traders to have the ability to buy and to sell different currencies on different exchanges. Brokers also contribute to a large volume with regards to the foreign exchange prices between different currencies. Okay, so to answer our second question, what is a broker responsible for doing? A broker is responsible for doing a number of different things. The first thing that is required of a broker in any country is we need to ensure that that broker is regulated or licensed. Because we're in South Africa, any broker operating in this country needs to be registered with the Financial Services Board, which is the FSB, with at least a Category 1 license. The second thing that a broker is responsible for doing is ensuring that all clients or all retail traders who wish to trade with that broker need to provide FICA documents. So basically, they need to provide proof of identification as well as proof of residence. And then the third thing that a broker is responsible for doing is providing all their retail clients with clean access to the market. So this is basically with regards to a trading platform. So it can either be your C-Trader, your MT4, or the new MetaTrader 5 platform that basically gives us the platform or the access to be able to click that buy and sell button so that we have access to actually trade on a number of different currency pairs, commodities, or indices. So question number 3 that we need to answer is, how do brokers make money? Now, there are 3 ways that a broker can make money. A broker can charge spread, a broker can charge commission, and a broker can charge swap. Let's start with the first one, spread. So I'm going to give you an example. The rand currently to the dollars maybe trading at about 14 Rand 20 cents. Now, let's say I would like to enter a buy position on this specific currency pair, which basically means I would like to purchase the dollar against the rand. If the rand is sitting at 14.2, the broker is going to offer me this buy purchase at a slightly higher price. So let's say they would offer or allow me to purchase the dollar against the rand at 14.3. The price difference between 14.2 and 14.3 is what we call spread. So the market would have to move a certain distance in order for you to meet the broker cost first before you actually move into profit. And this would work vice versa if we're looking to sell a currency. So if we're looking to sell a specific currency pair, we'll use the dollar against the rand once again. So we're sitting at 14.2 at $1 for the rand, and we would like to sell this specific currency pair. The broker would then offer that price at a slightly lower price, maybe 14.1, and then we would sell. We would now need the price to move a certain amount of distance first to cover the broker spread before we actually move into profit. And that is basically what spread is. Spread is just a slight change in price in order to compensate the broker for facilitating this transaction and allowing you access to the market. The second way a broker is able to generate money is commission. So some brokers charge spread, some brokers decide to charge commission. Now what commission is you're not going to be charged spread. So you're going to use the same currency pair again, the dollar against the rand. If it's at 14.2 and you would like to buy at 14.2, then that is the exact price that the broker is going to offer you. Instead, they will take a commission based on the volume that you're using. So let's say if you're buying one, right, and the broker charges 10% commission, that means they would be charging 10 cents of your $1 or R1 or €1, and it basically goes up. So if you then decide to buy 10 lots of USD against the rand, then the broker would charge you $1. So different brokers have different charges. I would say the industry average is 7 to 10% of whatever lot size or whatever volume you're using at that specific time. So this is something that you can decide obviously for yourself, whether you want to be charged spread or if you want to be charged commission by a broker. Okay, the third way a broker can make or generate money or charges with regards to retail traders who are trading with the broker. This way is a little bit more complex. The reason why is because a broker is able to charge you, but a broker also has the ability to pay you in this instance, and this is called swap, right? So let us take a specific currency pair like the rand against the dollar. Now you have the US dollar against the rand. Each currency has a specific interest rate that is attached to it by its central bank, right? So now at this point in time, the interest rates for the dollar are slightly higher than what the interest rates are for the rand, right? So if you are purchasing the dollar against the rand and you're going to be holding this trade overnight, over a specific amount of nights, so you're going to hold your trade for 2, 3, 4 nights, that means over each night you're going to either be charged or paid for holding that trade overnight. Now if the dollar's interest rates are higher than the rand's interest rates, then what that means is you are going to be paid for holding that trade over a night or 2 or 3 because of the difference in interest rate. So it's almost an interest rate divergence. The higher interest rate in the currency pair that you're purchasing and holding overnight is the positive swap that you're actually going to be paid for holding that trade. Now, if we look at it from the other direction, so now let us say we're buying the rand against the dollar. So we're selling the currency pair USD ZAR. If the ZAR has a lower interest rate than the US dollar, you're going to be charged every single night for holding that trade. And once you basically close that trade, those broker fees will go to the broker. So it really depends. You can do a little bit of analysis to find out which interest rates are higher in order for you to understand, am I going to be paid positive swap for holding this specific trade, or am I going to be charged negative swap for holding this specific trade? Okay, our fourth question, what type of brokers do we have? Now, essentially we get two types of brokers. We get a dealing desk broker and then we get a non-dealing desk broker. We're going to start with the dealing desk. A dealing desk broker offers fixed spreads, either above or below the price with regards to your specific currency pairs. Now, I'm not going to lie, this type of broker is a broker that I'm not the biggest fan of, and I do not advise that any of you should use a dealing desk type of broker. The reason why I say this is because dealing desk brokers also do not take your trades straight to the market through a liquidity provider. Instead, what they do is they take the opposite side of your trade. So there's almost a conflict of interest between the two parties, between the client and between the broker. They charge fixed spreads, but they also re-quote you based on specific entries as well as exits on your prices. So dealing desks send your trades to a dealing desk and they don't send it directly to the market. They trade against clients, so they're basically what we call market makers, and those are brokers that we do not want to use because we want the best possible price whenever entering a specific trade. Okay, the second category is our non-dealing desk broker. This broker, number one, they're not categorized as a market maker, so they are not taking opposite positions to clients, so there is no conflict of interest. They do charge spreads, but they do not charge fixed spreads. So they are able to increase spreads as they wish. They usually do this when the markets are a little bit more volatile, or when we have economic announcements that would cause markets to be slightly more volatile. So they would increase spreads. Majority of the brokers under non-dealing desk brokers that charge spreads are called STP brokers. STP stands for straight through processing. This basically means that your trade is not being sent to a dealing desk, but it's actually automated by a computer. So it's not going through anybody, you're not getting requoted or anything. You're basically being charged the spread at the time, and your trade is executed almost instantly. So that is the one type of broker that we have under the non-dealing desk broker category. The second type of broker that we have is what we call ECN. ECN stands for Electronic Community Network. Right? Now this is where we get those brokers who charge commission on their trades. So we're not being charged any spread. So whatever price we would like to enter on a specific currency pair, we're going to get entered directly at that price. Instead, what the broker will do is they will charge us commission with regards to your specific lot size or your specific volume. Once again, they're also not taking trades directly against you, but instead they're sending your trades straight to the market. When traders speak about trades being sent directly to the market, it means the broker is sending your trade to a liquidity provider. The liquidity provider is then the party that's responsible for taking the opposite trade against you, and not the broker. So there isn't necessarily a conflict of interest when it comes to this broker type, right? Me personally, I would advise both. It really depends on what type of trader you are, whether you're a swing trader, whether you are an intraday trader, or a long-term trader. If you want to know more about that, you're going to have to sign up to the Likwid FX Trading course.